on to tracking some more earnings now. Cera Sanitaryware reported an operationally strong first quarter, but revenue grew at 8%, which is comparatively muted on a YOY basis. The company's EBITDA rose 12% on lower input costs. Margins also were up 60 basis points on a YOY basis. To discuss the earnings and the outlook for the rest of the year, we are joined by Ayush Bagla, the Executive Director at the company. Ayush, good afternoon. Thank you for joining us. Well, it's an operationally strong quarter, but I was just taking a look at the revenue growth. It's at 8% versus the targets that you've set out of around 19 to 23%. Can you tell us what happened here, any particular reason, and what kind of growth rates are you looking at in FY24?
For having Cera Sanitaryware on your show, we set out target of doubling our top line from 1440 crores in March 21 to 2,900 crores in September 25, and that required a CAGR of about 17 to 19%. Last year we received a growth of 25%. That included the best ever quarter last year in FY23 for Q1. And to beat that on a higher base, yes, we did beat that by 7%. But see the quality of earnings on the EBITDA upfront. The EBITDA has gone from 60 crores to 84 crores. And PAT has gone from 39 crores to 56 crores. So quality of earnings has completely changed. And there are 2-3 reasons for that. Of course, we are at the manufacturing level, design level, there have been a lot of changes, upgradation. And we are now asking the consumers to upgrade, both in terms of design, functionality, and therefore also price. So this up move by the consumer and increase in the price per product sold, that is the reason that earnings are moving up in greater in line than with sales.
So do you think you can achieve that 17 to 19% that you require to on an annual basis to achieve that doubling target by September 2025 this year? FY24 revenue growth will be 17 to 19%?
This is the most likely run rate. And, to do that, we have to cross about 2,150 crores on an annualized basis. So most likely that target should be achieved. So the only reason you're seeing an 8% increase over Q1 last year is because last year's Q1 had a significant expansion.
Okay, we take that point. Your margins are higher on a YOY basis, 60 basis points there, but on a quarter-on-quarter basis, they are flat. We spoke about gas costs coming down on a quarter-on-quarter basis. Shouldn't have that led to margin expansion? And have you seen further softening of raw material costs? What is the margin outlook for the year?
See, YOY is the best comparison because of the seasonality of sales. And, the fourth quarter is always the strongest. So when you have additional 150 crores of top line, margins will always increase. So yes, gas costs have come down, but for us, the impact on a YOY basis was only 4 crores. Because for us, consumption of gas is not as much as most tiles players. In sanitary, where the consumption of gas is only a fraction of tiles players. In faucet, where all the production is done through electricity. So there was also an increase in raw material of sanitaryware, which was offset by decrease of brass prices and feldspar prices in faucet. That plus the increased efficiency at the shop floor and the upgradation and manufacturing of more expensive products did it for us this quarter.
So what's the trend on margins from here on, Ayush?
I would say, first of all, we have now insulated the company from interest rate cyclicality and real estate demand cyclicality. Because 65% of our sales are B2C sales. So due to that, I think the margin expansion is continuously happening for the last 9 quarters in a row now, and will continue to happen for the next 3 quarters on a YOY basis.
Okay. So when we talk about margins, I also wanted to take a sense of ad spends. You had told us last year, typically it's around 30 to 35 crore rupees, but last year you spent around 60 crore rupees. What is the ad spend trajectory looking like this year?
Normally it's 3% of sales, and as sales are growing on an absolute number basis, you'll find the ad spend growing on an absolute number, but as a percentage of sales, they'll continue to be 3 to 3.25% of sales. So this year could be anything around 64, 65 crores.
What was the capacity utilization in the current quarter, and is there any target?
So in sanitaryware, we utilize 100% of our capacity. In faucetware, it was 106% of our capacity. In faucetware, we are on the cusp of now commissioning a brownfield expansion project, which increases our production by another 33%. That is happening in August. In sanitaryware, we are now completing due diligence on a land parcel in Gujarat for a greenfield manufacturing facility. So work groundbreaking should start before March.
Okay, all right, Ayush. Always a pleasure speaking with you. Thank you so much for joining us and telling us what the plans going forward are. 17 to 19% is the growth that the company is expecting in FY24 and on track to achieve their guidance as well. We'll slip into a break. On the other